This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, February 18th, 2016. Euro dollar. So it's important to note that despite the recent setbacks in the euro, the market still remains constructive on a short-term basis, while it holds above that previous resistance now turned support at 110.60. Consider the possibility of a higher low somewhere around current levels in favor of the next upside extension back towards that measured move objective at 114.10. Sterling dollar. So cable has seen some setbacks in recent trade with these latest declines, suggesting that the market could be poised for a more immediate resumption of declines back towards a retest of those recent 7-year lows or near 7-year lows at 140.80. At this point, the market remains locked within a well-defined downtrend, but if we can break back above the high that we saw on Wednesday, which comes in around 143.40, this could suggest a higher low in favor of continued correction. Still, the market would need to establish back above 146.70 about to take the immediate pressure off the downside. Dollar yen. So dollar yen has seen a nice little recovery out from those recent multi-month lows at 110.98, though rallies have been well capped now ahead of some previous support now turned resistance at 115.97. Look for the market to start to consider the possibility of a lower top ahead of a bearish resumption back below those recent 110.98 lows, below which opens the door for the next major downside extension towards the 108 to 110 area. At this point, if we do see any rallies in the sessions ahead, they should be very well capped again by that previous support now turned resistance at 115.97. Euro Swiss. So Euro Swiss has seen a nice little bounce in recent trade with the market showing some formidable support into that previous resistance area around 109.50. At this point, there is risk for additional upside in this market over the coming days and weeks, with a break back above 112 to open the door for the next major upside extension towards the 114 area further up. Any setback should continue to be very well supported above 109 on a daily close basis. Aussie dollar. So Aussie has seen a recovery over the past several days with the market bouncing out from those recent multi-year lows at 68.27. But overall, the downtrend remains firmly intact here, and the choppy consolidation is expected to eventually find some form of a lower top ahead of the next major downside extension in this market. Only back above 73.85 would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen a nice correction over the past several days out from those recent near 13-year highs at 146.90. The pullback is now extending towards some critical rising trendline support off those May 2015 lows, which comes in around the 135.50 to 136 area. Once this level is tested, look for the possibility of the next major higher low in favor of a bullish resumption. Kiwi dollar. So Kiwi continues to be very well capped into rallies, and though the market has been locked in a choppy consolidation over the past several weeks, any rallies should continue to be very well capped in favor of an eventual break back below recent critical support at 63.47. At this point, any rallies towards the 68 area are expected to find some good offers, with only a break back above 69 to compromise the bearish outlook. SPX 500. So the S&P 500 has seen a very nice bounce over the past several sessions after the market based out at fresh multi-month lows at 1808. At this point, though, the rally is still classified as corrective, and we could even extend up towards some previous support now turn resistance at 119.93 before the market looks to put in that next lower top and once again resume this newly adopted downtrend. At this point, only a break back above 1993 would compromise that bearish outlook. Gold. So gold has been consolidating recent gains, though the consolidation is significant as the market now remains very well supported as in the process of a major bullish structural shift. The break back above 1192 several days back now confirms this bullish outlook and opens the door for the next major upside extension in the days and weeks ahead towards next critical resistance in the form of the January 2015 high at 1307. Any setback should now be very well supported into the 1150 area.